Hello, everyone. Welcome to the weekly roundup. Today, we will cover more geopolitics, economic data, and earnings releases. Hello, Ben.
Hi, Eva.
How's it downtown?
It's great downtown. It's a snow day for the kids, so they're happy. But it's quiet, a little snowy, but quiet down here.
Oh, a lot of snow. I think it's been snowing for hours. And it was just getting better. The earlier start of the week was so good.
It's true.
Okay, let's jump right into it. Geopolitics remains at the forefront of the news, from unrest in Iran to instability in Venezuela, and we're getting a lot of questions. The One of the questions is how are these hotspots influencing commodities, particularly gold?
Hmm.
We saw the recent run, and what impacts are we seeing in the currency market?
Well, thanks, Eva. Yeah, I think geopolitics is the flavor of the day. Certainly going to, at least so far, be what Trump's second term is about. So tremendous amount of things happening. Venezuela, I think, so it continues to be a very important piece for Canada. I don't think it gets enough attention and press because the heavy crude that Venezuela produces is quite similar to what we produce, and if the U.S. decides that they can get it at a better price from Venezuela versus Canada, then that's going to be a positive for the U.S. and a negative for Canada. So that'll be interesting to see how it plays out. One of the things that uncovered last week, I guess, is there's still lots of ground to cover in Venezuela because you have the military that seems to be generally on side with the U.S. and current leadership, but you have the Venezuelan police that is still connected with Maduro. So I think it's going to be very important to continue to watch that. That's not a done story. That's an important one to continue to watch. And I think very relevant to what happens to Canadians and Canadian energy patch at this point. As for the other geopolitical events, of course, is there's plenty, and you mentioned Iran. Um, I'm not sure is my answer in that case. I think certainly there's civil unrest. And I think many people are cheering for, we'll say, independence for people and democracy and so on. It's quite a closed country, so it's hard to trust and understand the information that's coming out of there. Certainly, the US could not just drop in there and, like they did in Venezuela, and make a change. I don't think that is one they're certainly considering. Maybe they would have a different approach. Maybe Israel would be involved, but I don't think they can do what they did in Venezuela. Much different country, much different dynamic.
Um,
Yeah. There's still more geopolitics, so before I'll continue to go on a few more tangents before we go on to the next question. But Greenland, of course, is taken front and center as well this week, and Vance had a meeting with the Denmark and Greenland leaders yesterday, which appeared to not really result in anything positive either way, I don't think. What came out of it, at least from a European perspective, is they're sending France, Germany, Denmark are sending troops on the ground. So that is happening or happened already in Greenland. So the European Union seems to be banding together to protect Greenland at this point. So that'll be a key point to watch. Much different from a perspective of what's the economic impact. It's much more of a strategic impact that Trump's trying to put in place there, saying he wants this golden dome where if they have, if they're in charge of Greenland, they can set up anti missiles to protect anything coming out of Russia. So I think there's a lot to cover there. And did I miss anything else?
where do the commodities fit in all this? I mean, gold, currency.
Great. Good point. Very important. Yeah, I think so. I think from a energy complex perspective, certainly Venezuela swinging around back and forth is going to have an impact. Iran, Qatar, Saudi, those ones will certainly have an impact depending what happens there because it's heating up a little bit there as well. So we see oil bouncing around up yesterday, down today. And so I think we're going to see a lot of that swinging up and down. If we get a reacceleration of economic activity, which I think is certainly possible this year, certainly we could see oil take off from that point. Gold, wears so many hats, and you can look at it from many, many perspectives. And I think we talked about this last week, but the fundamentals are such a strong case for gold and silver because you don't like geopolitical unrest. You have, currency devaluations. I was looking at the US, what they need to do this year. They need to raise, well, $10 trillion in debt, or 10 trillion is rolling over, 7 to 8 trillion of that's interest payments. So you get massive currency devaluation everywhere. So there's a really strong bullish case for gold and silver. But on the technical side of things, I think it's the opposite at this point. You're getting huge overvaluation, overbought in gold and silver. You're getting massive speculation to the long side, making the market much more fragile. So it's yeah, as I say, maybe a double-headed beast at this point that you have to decide, do I want to own this for 5, 10, 15, 20 years? I think if that's your view and thesis, then it doesn't matter. It is a good place to have some capital as another, we'll say, currency basket in your portfolios. If you're more of the case where I've owned this, I've made a couple 100% in the last 12, 18 months, then I think you probably take some strategic decisions to reduce risk and take some profits and lock them in because I think it's a little more fragile now. Um,
Okay.
yeah, and the last piece, just the overall, we'll say base metals complex. Again, I think that's really volatile, and that one's much more related to tariffs and trade, and while important, not as front and center right now.
Okay. Job numbers slowing in both the Canada and US. Um, Even as the broader economy seems to be expanding. What are the possible implications for interest rates? How would the central banks respond to the shift?
Yeah, so again, these are, I think, as I think about a lot of these things now, it's a bit double-edged where it's what's happening short term, what's happening long term.
Long term. Yeah.
Yeah. I mean, on the long-term side of things, demographics are terrible in North America, right? People are aging out, workforce is shrinking. I'd say that's a long-term demographic risk change. And obviously, that doesn't really implicate or it doesn't really have an impact on interest rates or inflation. But to your point on the shorter end, at least in Canada, we saw an uptick in participation rate. And of course, in tune, we saw a downtick in employment numbers. So unemployment's increased because participation increased. I'd say neutral in Canada. If you look at where overnight rates are in Canada 12 months from now, they're about 6 basis points higher than where we are today. So pretty flat curve. And that's going to really change based on our inflation and economic numbers. Inflation's coming down the next couple of months, barring a material change. Inflation's coming down, so GDP is going to be an important thing that the Canadian Central Bank will look at. But then on the US side, yeah, unemployment's going to continue to rise a little bit. Inflation appears to be in check, and US Central Bank is talking about changing their inflation band from 2 to 3%. If they do that, that probably gives them room to cut rates a little bit faster. So I think we're getting a big structural change in the employment numbers, but ultimately to say sideways to down, depending on the type of environment we get from an economic perspective.
Okay. So my last question before we go into the charts, earnings season seems to be underway.
Mhm.
I know some US banks have started to report. Anything worth highlighting so far?
I mean, the thing most highlighting is again Trump related, because he said he may try to put a cap on, or I guess put a cap on what credit cards can charge. So that would have a pretty material effect on the U.S. financials. because they charge, as you know, 22%, something like that. And they're suggesting they cut that rate in half. So that would be, it's one of those things that'd be a drag on their numbers. That would be a boost in consumption in the US is such a consumption-based economy. That'd be a positive. So, but to your point around earnings specifically, numbers were good from the financials, but at the same time, we had the day before the financial started report, we had Trump come out and say he may put some constraints on the credit cards and what they can charge. So that'll be, I guess, an important piece to watch.
Yeah. Okay. I see the chart.
All right. Let me just pop them up here. I think the snow is dragging it down a little bit. A bit of a lag.
Yeah. Okay. I think
Let me
it's
know.
coming up now.
Okay.
All good.
Okay, perfect. So as usual, we're recording this January 15th at just after 1 o'clock. So anything that happens between now and next Thursday at 12:59, we'll comment on it then. So lots, I think, to comment on, but this is a chart that I think grabbed my attention a little bit around gold. So gold's been a massive uh, boon for Canadian exporters. So, gold exports as a percentage of GDP. Gold has played a material role in what our numbers look like right now. So I think this is a key piece to watch. There's been a number of things that have helped Canada in the past year. Like last year, we had IMF adding Canadian dollar to their basket reserve, so that actually was a boost to Canadian bonds and Canadian currency that acted as a support and tailwind. A lot of the things that we thought would weaken Canada have actually been okay for Canada. This was another piece I think to watch. If we do get a bit of a rollover in gold, it's going to be a negative impact in Canadian GDP. So I think this will be one of the charts that grabbed my attention. So if you look at the red line, total exports ex gold to non-US partners and total exports to non-US partners, there's a material difference, and that boost is really based on gold that we are exporting. So I think you read my mind on some of these charts. These were some that jumped out, and so yes, the participation rate in Canada jumped at the end of last year, and so in turn the unemployment rate jumped up a little bit as well. So, you know, Canadian employment data has historically been quite choppy. And so it is, I think, a point to look at, does this trend continue or is this a one-off? So I think this will be an important piece as you look a lot of chop here. The participation rate and the unemployment rate is a bit smoother, but employment data in Canada is super choppy. And so if we see unemployment continue to rise, this may be a signal that we would see interest rates come down one or two more times depending on what happens in the Canadian economy at this point. So great chart, interesting just around participation rate jumping and unemployment rising. This chart is around tariffs. And so I know we've spent a lot of time the last couple of weeks talking about geopolitics and probably the last, I guess, 6 months. Maybe it feels like it. I'm not sure. Things are changing so often and frequently with the current leadership in the world. But this is just a chart just around what happens if the tariffs get cut. And presently, right now, this argument's going on in the U.S. Supreme Court. If they decide to go ahead and say tariffs are illegal, does that mean that everything goes back to normal? And I think the general answer is definitely not. It would be probably a positive boost to the economy, at least temporarily, and to the markets from a sentiment perspective. But there's so many other levers that President Trump could pull that could have and continue to have negative impacts on a lot of companies, particularly the pharmaceutical industry. So EPA's ruling could cut tariffs in half. yes, as I say, but this would be a temporary measure, likely being targeting industries and businesses a little bit differently with other types of taxations that maybe aren't tariff specific. But a great chart just around the different countries that would be impacted positively and negatively if tariffs are forced to be put on hold. Lots of conversation about retribution. Do they have to pay these companies back? So on and so forth. Again, these would be temporary measures, but that'll be an interesting piece to watch how things play out over the next few months. As always, the opinions do not necessarily reflect those of National Bank Financial. I have prepared this based on my understanding and research of the markets in the world. Not every investment we discuss is suitable for everybody. Everyone's risk tolerance is unique. If you do have any questions at any point, certainly feel free to reach out to Eva or myself. We're happy to talk with you or speak with your advisor. And yeah, thanks so much for looking at the charts today.
Great. Thank you, Ben.
Mhm.
So what's on the agenda for next week?
So a few things. Monday is Martin Luther King holiday. So US markets will be closed on Monday. So it'll be a bit of a quieter week there. And I'd continue to see what happens from here, I guess. There's been so much geopolitical noise out of the gate. Markets are off to a nice start. Certainly gold and silver has continued their route higher into the start of this year. So we made some changes in portfolios yesterday as we haven't talked about it too much, but we launched an international basket that we're managing now. And so we made some adjustments there yesterday, which was reducing exposure to gold and adding exposure to energy. So let's see how that plays out. There is still plenty to do. I guess as I look back through my notes, I think one of those key pieces that I've been trying to understand is how is the US going to get interest rates lower this year? Because if they need to, raise $7 or $8 trillion of debt just to make their interest payments, the way you fix that is to reduce your interest payments by changing the rate. And so, if they decide if we do get a Fed-friendly leader in place in May, how quickly can they bring rates down, and what is the knock-on effect of that? That's probably a huge boost to the U.S. economy, again, at least temporarily. So I think there's lots of ground and lots of volatility this year to be conscious of.
Okay. Good. Thank you. Okay, thank you, everyone. Just a reminder that our annual outlook for 2026 will hold on January 29th at 12:30 p.m. We will send out the invites next week. Remember to visit, subscribe, and follow us on YouTube and LinkedIn at Hart Investment Group. The link to our daily financial heartbeats will be in the caption of this video and in your email box. For our clients, please reach out to me if you have any questions or if you'd like to book a review meeting with Ben. Thank you for listening and have a good weekend after Friday.
Thanks, everybody.
Bye.
Bye.